Okay, so we are looking at life after the PCE. You have this price gap there, and that's where price is coming on Dixie for the third time and bounce from it. 1, 2, 3 times we are bouncing from this area. So usually they always provide some reaction even sometimes after, and that's what's happening here. So despite we had let's say a less inflationary data on the USD, it first had a negative reaction when it was a little bit sold, and then it's buy again. The reason why it's buy again immediately is that we have some people that are thinking, a lot of people are thinking that Powell will be very hawkish on the USD and will probably open for a lot more rate hikes, which is not what is sure to happen. In my opinion, we could have a very neutral or balanced comment from Powell because of the data, economical data we have seen, and that could probably push him to be a little bit less aggressive, even if we'll keep on saying they have to fight inflation and blah, blah, blah. But there have been several signs of less inflation, but there have been several signs too of some slowdown in economy and in consumer sentiments. That is not good, because at the end that will, or that could make the growth less strong, or even look for recession in 2023, which is the fear of everybody. So for now, that's where we are exactly now at this time. We can look at this other chart here, but it's the same. It's a little bit a mess, but it's kind of same chart, and those one are very busy. So I prefer to keep on this one. It's much cleaner, much better. We have pulled back after the break of the trend line. We pull back, we bounce back inside here, stop on the quarterly order block. Then we pull back and went through the trend line again, which is what we have here. So we went through, we came back on the trend line, and now we are back there. So inside the PCE, inside the speeches later, we have, of course, two options: or we go up or we go down. That's simple. But if we would go up on the USD, of course, we have this level that has not been touched yet, which is the one-to-one extension at 109.74 here, which is very important, and which, technically speaking, should be tagged one day or the other. So it can stay like it is and never be tagged too. That's very possible, because we stop on that order block, and that's possible. We stay like this. We never touch again these highs here. You see, we stopped before it on the last push of the 23rd of August. So we protected the previous highs. All that is telling us we could have a long-term high on the Dixie and the long-term lows on USD in place, or more or less in place. What we have usually when we have a height that, or a long-term high or lows that are building each other, like we could have here. So this is what we have now. So we have had this high on the quarterly order block. We stopped before the 100% of the upside ABC. You see the previous ABC's level has been respected very nicely here, everywhere. So technically speaking, again, we should tag this level at one moment or the other, but I don't know if it will be today, but it could be that on a positive spike inside the speech, or an interpretation of something inside the speech, we could go there and then just touch it and then come back completely opposite side. So it can be very wild, very hard trading later. So that's why it's important to have clear defined level that we have here. This one is important, and if we would break higher, that would be this one. If we would touch again this level here, we would do the same. We would go through the trend line, but we would just touch them again on a daily basis. We would just fades break them and then come back again lower. And that would be very good because we would take the stops there at the same time. Technically speaking, we have an accumulation of stops of liquidity here and there. And usually before a turn, when there is a construction of what can be a long-term structure, we see a kind of spike that market is doing just to clean stops before turning. We are still in thin market, so we must be careful about that kind of move, and we must keep in mind they can happen anytime. Okay, so that's done for the Dixie now. Possibility of touching this one on a push up. Otherwise, we go down and back to this the next green ABC down, ABC up, which is the 88.6. Yes, there. Sorry, and this one. And this one sent to the back, and this ABCD here will provide a reaction unless we would have a very dovish statement today and we could just break through everything. So the next big thing is this one and those two ABC green here, and then we would have the next one here, the 61.8 and the 50%. That's what we could, that's what we could look at for today on a big move. We can see that, and I think it could happen even before for the end of months, because on the end of months we should have some people taking profit, and we should have some people less aggressively or less blindly long dollar. Okay, so that's what we have for now. Downside, there will be some support here, some support there, here and there. And on the upside, the ideal scenario, if we would push, would be to go to this one-to-one extension here and then pull back from it. Okay, that's for the Dixie. Let's do the same thing now with the USD, with the USD. So if we look at the USD, at the Euro USD, I will finally speak correctly today, I hope. So if we go to the Euro USD, well, there is no real limit on the upside because it has a lot of room up, which is several thousand pips. I'm looking on the upside on the Euro USD, as you know. So we can go really very high there. It all depends about the species. So if, as I just showed, if Dixie would touch this one-to-one extension, we could see a push lower. And in that case, perhaps we could see a push to that area there. That would be really interesting if we would see this one, which is the same on the other chart, by the way. I have exactly the same level here, which is a very, very important level we have in that area here with the 61.8 thread. And this 76 fib, it's just different chart I have because one is clear on some point and the other one on the other point, but that's exactly the same. So if Dixie would push to the one-to-one extension, we could get this level or perhaps just double bottom here. So that's what we have to look at. And if not, on the upside, let's go back to the chart I am using now. So if we go back, if we look on the upside, so we have a lot of room, as I just said. The next important thing would be the 2360 after the 38.2 here, and we have this big 76.8. The monster resistance here for the next big time will be the 61.8, which is the quarterly ABC up. I just refresh your memory about this one. So this one is the ABC down, This one is a very, very, very big ABC down, which is defining the 78.6, 76.40 we have here as a target on the very low, if we would break lows. But this one, the one I'm speaking about, this 61.8 here, this blue 61.8, is a 61.8 that has been holding since 2016, that we broke now in July, and that I think could post a fades break before the quarterly monthly close, because it's a quarterly ABC. So this one could very well close in September, That's what I would expect, to close in September above 103.60 and could even be higher. But that's even perhaps August would close above it. That would be very impressive if we would have this turn now. But if not, at minimum, what I expect is close above this level, a definitive close above this level, and we would go up for September. So that's all for now. If you have any question, just let me know. If not, I will post the video of this recording so you can look at it if you could not catch it on time. Okay, so thank you, bye-bye, and I will do another one later if something important is happening.